Hello everyone, welcome to our panel. We're going to be discussing DeFi and its impacts on traditional finance today. And I'm joined by SAGAR, AMIE, and Raf, sorry. I checked earlier. I think to start with, if we can all do a brief introduction. So really quickly, I'm Max Carmichael Jack. I was head of research for Cryptonary for around a year and a researcher for a while before that, and now I've set up a advisory and marketing company in crypto.
Sure, thanks. My name is SAGAR DeSai, part of Coinbase's institutional sales trading and prime team based in Singapore. Started my career in TradFi. I was in asset management at Goldman for about 5 years before I moved over to FinTech. Worked with the tokenization platform before Coinbase, and I've been with Coinbase for a little over 2 years now.
I'm AMIE, so I'm with Yuzu Venture Partner. So I came from actually a Web2 IT consultancy and design background. So I have been working with like DeFi, Degens, and now with Yuzu itself, I'm hoping to bridge for Degens and the TradeFi. So yeah, I am setting up a fund. Thank you.
All right. I'm RAFIK, VP of Growth at Mimo. Nice to meet you guys, and nice to see you all. And so basically at Mimo, we create protocols and assets to help users throughout different market cycles, so like bull run, bear market, and so on. And we focus on two protocols. The first one is called FELLAL. It's essentially a lending platform where you put your crypto asset as collateral and you can mint a euro stablecoin and a US stablecoin. And the second protocol, which is our main focus right now, it's called KUMA, and that is tokenization of real-world assets. So we focus on that for now, and the main differentiator, I would say, in comparison to other players in the space, would be that we actually tokenize those assets into interest-bearing tokens, so essentially stable coins that pay.
Awesome. And obviously today we're here to talk about DeFi and its impacts. I think the best place that we can start with this is, what is DeFi to you? What does it mean? Anyone feel free to jump in?
Maybe I can start because I work with the Degens and come from different background. So there are different aspects of DeFi. The impacts is that it obviously is just at the beginning. So I think for DeFi itself, the first and foremost now, it allows any participant individuals to put in money for what they believe in. And enable them to, the first thing when people want to venture into something, why is because out of necessity, out of things that for example, they want to get like more rewards and to counter the inflation. So that's first form of like adoption. You really want to do that because you want to be able to earn through other means, like for example, DeFi impact, like people looking out for airdrops. So airdrops is one of the things that people does. I heard of people live on airdrops. They never have to work. They just, actually, I work with people like that, they are degens. So they manage to have a wife, a family, they travel around the world, and I'm not just like hiding for itself. It's like, I'm not promoting just for the sake of promoting, but because of the airdrops, he worked very hard to be part of the basically marketing. He's actually a decentralized marketing method when you try to, work hard for the airdrop. So that's only one of the examples that you can have like financial freedom. Yeah.
Sure, I can go next. So at least to me, I think maybe because I come from a TradFi world, DeFi, which is obviously decentralized finance, there are many sort of layers to DeFi. One is obviously access. When you are accessing DeFi, you are essentially ensuring that anybody in this world can participate in traditional financial markets because of DeFi, because it's all decentralized. So as long as you have you have valid IDs and you can sort of upload those valid IDs on a DeFi platform, you can access the liquidity that's available on a DeFi platform. You can stake your tokens. You can essentially earn your rewards through staking. You can essentially do everything that you'd be able to do in a TradFi ecosystem, where probably the thresholds are a little higher compared to, say, DeFi. So that's one. Access is a big part of DeFi. I think the second is the ability to make traditional financial markets more efficient. Obviously there are many inefficiencies that have been improved upon over the last 20 to 30 years in traditional finance, but there are still inefficiencies that we haven't been able to really overcome. For example, I think when traditional financial markets started looking at a T+3 or a T+2 settlement cycle, we're still at T+1 today. So we still don't have instant settlement in traditional financial markets. DeFi makes that possible through the use of smart contracts, which allow essentially finality in your settlements on chain immediately, without any lag time between when the trade happens and when the settlement happens. So that's another part of DeFi, which is making traditional financial markets more efficient. So to me, those two are sort of core pillars of DeFi. And obviously we'll talk a lot more about many other aspects of DeFi, but I don't want to sort of hijack the conversation, so maybe I can pass it over to Raf.
Yeah. No, I mean, I agree with what you both said, and I guess, I mean, the way we can look at it is essentially a new internet native financial system that will either disrupt or improve the current, like traditional finance world. And I think in particular when it comes down to the trust mechanism, which is a big issue in a lot of countries, that's where I think we have a card to play with DeFi in order to get things better or completely disrupt them.
Yeah, I definitely agree. And leading on from this, you mentioned it very briefly, but why do you think we need DeFi? What's the purpose for DeFi? You can lead away with that if you want to go.
Yeah, sure. Maybe at the risk of repeating myself, the first reason is obviously to make things more efficient. Traditional financial markets haven't changed much over the last 2 or 3 decades. As in, there have been incremental changes, but those incremental changes are not significant enough for the world to see a completely new financial ecosystem. So for me, one of the biggest reasons why we need DeFi is obviously to change the image and change the ecosystem completely. So that's one. And then second, again, at the risk of repeating myself, it's access. As in, when you access TradFi products today, there is just so much bureaucracy. There's such a high threshold for you to be able to access TradFi products. And if you're able to abstract that layer out completely and get everyone to participate in the traditional financial in the financial markets ecosystem efficiently, I think that's a big win for the world in general. Without sounding too wokey, it's a great outcome for all of us in this room and for others. So those are the 2 main reasons why we need DeFi.
Would you guys like to add to that?
Yeah, I think in our case in particular, what we look at, especially with our second protocol, is basically bringing safe yield on chain, so like reward assets on chain, because this will allow anyone around the world with just basically a mobile phone or a laptop and an internet connection to be able to access, like financial assets, financial products that will get them safe yield back to them. So I think that's one of the main advantage we can bring to basically everyone around the world. Yeah.
Amy, anything that you'd like to add?
Yeah, and I definitely agree with all of them. The efficiency, the safety, and I think that the next step, like for DeFi itself, is to really understand what is the exact real world application and to bring it into our life. So I would take that, because right now it's like fintech itself, it's only like 2% of the whole market share of like 12.5 trillion industry. So it's like I would think that definitely there's a lot of growth in that. So DeFi is just fintech, and fintech encompass of other things like what we use on Grab, tech giants and all that. So we have a lot to learn from the current use case that the tech giants are really applying. So I think DeFi and the tech giants, they are going to blend in to have it, to bring it into our lives. That's what I think.
And in terms of the impacts on traditional finance, we hear a lot about the battle between CeFi and DeFi. Regulators are obviously on the front line there, often doing a very bad job, but trying their best, I guess. Do you think there's room for collaboration between DeFi and CeFi? Do you think they can work together, or do you think it's mutually exclusive and one has to be at the detriment of the other? RAFIK, if you lead away.
Yeah, I think it's, definitely collaboration, and I think we already collaborate. And I think it's a great combination because it allows CeFi players to essentially focus on what they do best, which is, let's say, marketing, user acquisition, right, and essentially selling trust, to users, to like future customers. Whereas in DeFi, what we can do is focus on building and getting the yield that we will basically, sell to those CeFi platforms that will sell it to the users and their customers. So for us, like from a DeFi standpoint, I would say that it's a good collaboration and a model that is essentially B2B to C. And for them, it's like, well, they can focus on the users, and then they can do the due diligence, with all of the DeFi protocols and DeFi products to pick and choose the one that they deem to be safe for, all their users.
Oh yeah, each has its own roles, right?
Exactly.
I definitely believe as long as there's centralization, that will be the CeFi, and then there comes the regulators, and the DeFi part would be I would think that it does produce more flexibility for financial inclusion. And where else for the CeFi part itself, the centralization is something that is important, especially for the on-ramp and off-ramp. So we still have to deal with fiat. So we cannot do without CeFi at the moment because we still need fiat to be pumped in and pumped out. Yeah. So definitely huge room for collaboration.
So I obviously represent a small part of CeFi because I represent a centralized exchange in the crypto ecosystem. So I think plus one to everything that you both have already mentioned. What we've also observed is that when it comes to market making for high market cap tokens, say Bitcoin, Ether, etc., it's obviously easy for people to access centralized exchanges like Coinbase, Binance, etc., and get a pretty decent bid on whatever they're trying to buy. But when it comes to sort of the longer tail of tokens, it's really hard to find liquidity. And that's where I think there's a big role for decentralized finance players like Uniswap, for example, to be able to provide liquidity for those tokens which don't have enough liquidity today on centralized exchanges. So I think there's definitely a world where I see DeFi and CeFi existing or complementing each other in some ways, where if you want to access the more liquid tokens, you could go to a CeFi player, but if you want to access maybe the less liquid tokens, you could participate on a DeFi platform. So that's one. The second, where I think Raf sort of alluded to that, is counterparty risk. Obviously, a lot of institutional players are always assessing what the counterparty risk is, and one of the challenges with DeFi is it's very hard to assess counterparty risk when you are accessing DeFi platforms. Mm-hmm. So if they're able to, if CeFi players are able to give their clients, institutional or retail, access to DeFi, but get them onboarded first on the CeFi platform, then you're essentially abstracting the whole counterparty risk layer out completely, because then you are trusting the CeFi player with all the counterparty risk, i.e. you believe that the counterparty that you're dealing with, i.e. the CeFi player, is a legitimate player. But then when the CeFi player gives you access to DeFi, you already know that your counterparty risk exposure is only to that CeFi player and not beyond. So as long as the CeFi player is doing enough due diligence on the DeFi platforms that it gives its clients access to, you're not sort of worried of accessing DeFi. So I think those are the two ways where I see there's enough collaboration and complementing between CeFi and DeFi. Yeah.
And if we look more towards traditional finance as opposed to specifically CeFi, so if we say the impacts on traditional finance, obviously of DeFi, in the terms of the collaboration there, can you see efficiencies that can be achieved on traditional finance with the use of DeFi? Is there a way for those two to coexist more specifically outside of, say, for example, centralized crypto, but traditional finance networks?
Yeah, I mean, I can start with this one. I think there, again, I think it's much more on the collaborative side than really like a battle between the two, and for multiple reasons. I think they both need each other. So obviously in DeFi now, I mean, with what we do typically, like tokenizing reward assets, we're using, you know, like traditional finance assets and products, and we bring them on chain just to make them accessible to more people. But the reverse is also true. I think when you look at, for example, BlackRock creating a Bitcoin ETF, it also gives traditional finance, you know, like new products to sell to their own customers. And besides that, like just basically, you know, like bringing new products into new industries, it will also allow like banks in general, like traditional finance institutions, to take advantage of blockchain for settlement, for like different transactions, just to save time, save fees. Like you can save a lot of, on a lot of different layers.
I think Raf covered it quite well, and the only point I would add to that is, and you know, this is sort of part of your business as well, which is tokenized real-world assets. As in, that's a big use case where I think DeFi is able to solve many of the problems with liquidity of real-world assets. So if you're able to tokenize real-world assets and then are able to settle them on-chain when there's a buy and sell sort of a transaction, you're essentially making those markets extremely efficient. Mm-hmm. Right now, it's so hard for anyone to sell a piece of real estate, for example, from a buyer to a seller or vice versa. But if you're able to tokenize that piece of real estate and then, you know, put them on chain and open that market up for buying and selling through a centralized order book, you are creating efficiencies by not only creating a market, but also by ensuring that those markets are 24/7 in many ways. They're not just limited to a certain time of the day, of the year. You're essentially opening those markets 24/7, 365, and making them more liquid. So that's, I think, a big use case where TradFi needs DeFi to create new products that they can potentially market to their clients.
Yeah, so I'll come from the investment point of view. So I think TradFi itself acts like a curator and somewhat like a very strong organization that makes sure that, okay, before I even invest this huge sum of money, this is something that I think it goes through all the checks and balance. So I think TradFi can act in that way. Where else for the DeFi, it's like, oh, this is what I need, hear from the community, and I crowdfund based on what I really want. So that is something that is really useful for innovation, product creation. However, of course, there are like pros and cons. Like the community itself, it's made out of people of very different individuals. So the management of the community will fall in place in a way that it will be beneficial in the beginning, but later on probably the TradFi can come in to like assure that this is what we're going to do. We're going to pump in more liquidity, and this is going to work because I'm going to make it a robust ecosystem. So I think in a way for investment, this is really useful. It's like a bit like a, Kickstarter, but not only for products or shopping, or yeah. So it's actually for entrepreneurs who want to create innovative systems, and services. That's all.
If I can just add something, I mean, from what AMIE mentioned earlier, when it comes down to on-ramp and off-ramp, and what SAGAR was talking about when it comes down to liquidity and efficiency, I think, I mean, when we look at the TradFi market, it's obviously regulated. DeFi market is not regulated. What is regulated in DeFi is the entry and the exit, so on-ramp and off-ramp, which makes DeFi by default, a lot more efficient, a lot more liquid, and it can grow much more than the traditional finance markets. So again, I think it's a nice way. I don't want to say a nice way out, but it's a nice parallel industry for the TradFi institutions to go into DeFi. And essentially have a more efficient, more liquid way to exchange goods. And also when you think about not just the fact that you can actually have a lot more users, a lot more people participate into it, but also when you think about it, you're going to be able to exchange all types of assets. Now you don't have, for example, to be an accredited investor in the US, and buy, I don't know, a T-bill, and you have to have minimum $10,000 or $100,000. No, now you can be in DeFi and essentially buying T-bills with 1 ETH. So it just creates a lot of new markets basically that makes everything more efficient and more liquid.
Yeah. And you touched briefly on institutions in DeFi. This is something we've seen very, very sporadically. There's not much of it at the moment. And there's a few reasons that I think we could pinpoint. If you guys could give your view on what's stopping institutions coming into DeFi and what could potentially open the floodgates, because that's a day we all want to see, really.
Regulation. As in, I don't have a better answer than that.
Yeah.
And I don't have much to add to that. It's regulation. I think, in general, TradFi or institutional clients are just waiting for regulatory clarity, mainly from the US, and I'm guessing that things will follow suit after that. But yeah, it's regulation. I don't know if you guys have anything else to
tell me. I was going to say the same thing.
It's a war between efficiency and privacy. So definitely for institutional. So you need to the intermediary for privacy. That's from the institutional side. Where else, on the other side, the DeFi side would be efficiency. So yeah, I think that it's something is relatively new. Again, it's going to shift somewhere into understanding what is really necessarily applicable to our lifestyle.
Awesome. And a question, Saga, for you, that I'm not sure if it's something that you're particularly involved in, but it's something that I'm very interested about, is Base, Coinbase's layer 2. Is that seen as a gateway for institutions into DeFi? Obviously, we have all of Coinbase's customers, then they're KYC'd already. That could be a gateway to bring in regulated DeFi. Is that the plan, and is there any information you can give around that or an overview?
Yeah, sure. So I think it's a perfect use case where, to what I was describing earlier, which is a world where CeFi and DeFi will collaborate. So obviously, Base makes it extremely efficient and extremely competitive for protocols all over the world to build on Base, because the cost is so little for transactions to get settled and to take place on the Base layer. So I'd say it's definitely an effort toward that aim, where you're giving access to the crypto ecosystem globally to anyone who wants to build on Base at a very, very low cost. I think that's sort of the premise behind it. I'm not personally involved in that project. There's a whole different team that looks after that project, so I don't think I'm sort of the right person for that. But definitely that is sort of the ambition, where Coinbase does want to become the gateway to the crypto ecosystem for everyone in the world.
Yeah, awesome. And for those who don't know, Base is a layer 2. It's built on top of Ethereum, and it's essentially trying to bring builders in, and it could offer AML and KYC'd access to DeFi, which is what regulators are complaining about at the moment. So on the note of regulators, RAFIK, do you want to tell us a bit on what your perspective is on why crypto and DeFi specifically can't be regulated at the moment, and what could possibly change to allow that to happen?
I think, it's very good question, first of all. Complicated subject, and it changes a lot from one region to another, from one country to another. I think some countries are handling it quite well, where they're trying to understand the DeFi and blockchain and so on, and really trying to find a way forward. And I think, typically think Singapore is doing quite well. Hong Kong also in the region. You have Dubai, obviously, and then a few European countries like in Liechtenstein, typically where they have the Blockchain Act. But I think for a lot of other countries, it's more, I would say, a lack of understanding, and a lack of resources that makes them just, get out of it and ban crypto. But I mean, as usual, I think you have to have a few pioneers, right, that will act as a lab for blockchain in general and crypto and DeFi. And once everyone sees that it's actually working, that it's actually improving the financial system, then we'll have a lot more countries follow suit.
I think for the regulators, it's going to be hard to regulate purely because, you don't regulate, Singapore don't regulate, US dollars, or US don't regulate other countries' dollars. And where else, all these are on the internet. So how are you going to regulate money that's on the internet? And I think that this forced all the regulators of different countries to collaborate together. And with that collaboration, then you find the best, results and equilibrium that actually will be able to be more sustainable. So yeah, it's very hard to regulate because you're looking at it very separately, and yet it's unifying. So.
I think they've covered it all, but I think it's a long road ahead. It's not going to be something that we can realize in the next 1 or 2 years. I think I can easily see a world where this could take at least 4 to 5 years before we reach some level of regulatory clarity. There will be incremental changes, which is how typical policymaking happens all over the world, especially in countries like the US. So I think we will see incremental changes. For example, we recently obviously saw the Ripple judgment where there is a little more clarity provided. But again, that judgment was also criticized yesterday. So we will see this back and forth, this tussle or battle between these two worlds. But I do think, and maybe I'm a little biased here, but I do think large economies like the EU and the US will have to take the lead here before we see some consensus on regulation globally. So once we see regulatory clarity in these large economies, that's when we will start seeing some regulatory clarity all over the world.
Yeah, I definitely agree. And in terms of regulation, a couple of interesting points. Obviously, we've had MiCA for the European Union come out soon,
That's right.
and that purposefully didn't touch on DeFi because it's too complex, and it said there's not a chance that they could do it now.
But maybe that's where, I wouldn't say I disagree, but this is maybe where we see, instead of large economies, I think, it's just like, okay, with payments typically, where we are used usually like in Western countries to use credit card, right? China did not have that legacy system of credit cards, so they were able to jump forward and get QR codes. So I think countries where the financial system is not really well done, they actually have a chance to take on blockchain technology and DeFi, to make a jump forward. And they might actually, do it before large economies or Europe or the US or China does it.
Yeah, I think the only sort of concern with that is obviously a lot of legacy financial institutions or the financial ecosystem has been built using the infrastructure in these large economies over the last how many ever decades. So it's very hard in my view, it's very hard for smaller economies which perhaps didn't have such an outsized impact on the financial ecosystem in the previous years to be able to come up with something that is novel, obviously, but also compliant enough for it to be adopted by everyone globally. So that's sort of, because you're essentially trying to build on the legacy financial ecosystem. And the legacy financial ecosystem is based on the infrastructure of those legacy economies. So for me, I think I find it hard to sort of believe that maybe the newer economies or the smaller economies will have an outsized impact on policy. I still think, and maybe I'm biased, but I still think the larger economy policy making will have more impact.
Yeah. I guess future will say, but it's more as if, okay, you look at typically China, they ban crypto, they allow blockchain, which is obviously two different things, but then they will still use, Hong Kong will be like kind of a lab where everything can be implemented. Now they have pretty open regulation when it comes down to crypto. So Hong Kong alone might not be considered a giant economically, but still they have like a very important role to play.
Yeah, 100%.
I think as well, what we'll probably see is we'll see the smaller economies take on the risk. There'll be almost a playground that gets tested. We'll see major adoption there, and policy will be guided by what's happened there, for sure.
Yeah, and we've seen some really encouraging efforts by the MAS, obviously, here in Singapore, to collaborate with regulatory bodies globally, and have white papers published so that everyone can benefit from all the learnings that are happening as part of this, sanitized lab, if you will. So, yeah, I think obviously a lot of these regulators are extremely sophisticated, especially the MAS and I'm sure regulators in Hong Kong and Dubai as well. And then when we see collaboration between regulators in the larger economies and in the smaller economies come up with white papers which share their findings, I think that will be a good way to get everyone on board and make sure that there is consensus globally.
Definitely.
Yeah.
And Amy, you mentioned that you deal with degens quite a lot. Safety in DeFi is something that is lacking in, to use a blunt word, lacking.
Not
because
true,
it's hard for people, awareness around safety in DeFi is lacking. So we've got, in the last few days, we saw Curve exploited, which was initially thought to be around 100 million. It's a blue chip DeFi protocol. It's years and years old. It's one of the first ones that come around. It provides liquidity across the market. To have that exploited, it was based on the code base, an old version of the code base, which is almost impossible to flag. How can we be safe within DeFi from a personal perspective? How can we avoid the hacks that people get into? And then on a platform perspective, how can we keep people safe within DeFi?
I think at the moment there are different groups and forms of like technology that favors the other. Like on layer 2, you have your ZK rollups and your optimism, and then optimism works in a very different way with very selected partners. So ZK rollup is more open. So I would think that if you have firstly, you need to do your own like research. If I'm talking from a point of view from a person coming into DeFi, truly like an individual. So you really need to know where the news is, who are the people, talk to the founders, talk to the groups, and then you kind of know that they're actually pretty friendly. They will actually talk to each other. It is that definitely, even in traditional like Web 2 businesses, you have your other bad actors as well. Like maybe maybe half, some could be really purely business, just didn't work. But yeah, even in the traditional business, so you just have to really do your own research. Make sure that your whatever money that you are using, it is an extra cash that you're using to try. You always have, you don't put your whole life savings or you bet on it. It's never wise to do that. So the only advice really is to do your own research, get into the group, discuss, and know, like, for example, you wouldn't get the news about the crypto projects on Google or Yahoo, right? You get on Twitter to find out more. So you need to know where to look for the news itself and talk to the people directly, DM them. Do your own research. Don't say like my friend say this is good or get bad. It's just go to the community, listen to the AMAs. That is truly how you get in it, because that's how on the DeFi fund side, it has really like truly the DeFi project itself is still listening to the community of what they want, the proposals, and actually already seed funded like 25 seed projects for Web3, and those are actually working systems itself. And from there, that within those 25 projects, people kind of know each other, and then it spread to the next one. And it's actually, people are helping out each other in the degen realm and community. once one project is funded, the project itself will set up a venture to fund the next project. So they will actually work together. Yeah, so it's a different perspective if you are actually a DGen. And in fact, DGen could be very protective about what kind of investment comes in for them, actually. Yeah.
And RAFIK, from a protocol level, this is obviously something you're having to deal with, is how to keep people safe in DeFi.
Yeah.
Can you give us a bit of an insight into that?
I mean, first of all, we have to realize that obviously, even when you're not in DeFi or blockchain, like scams happen, phishing happens. It's not just in blockchain. That's the first thing. But obviously, when it happens, it's quite impressive. It happens very quickly, so everyone gets shocked. Now, two things. I think the first one is that it's actually better when it happens on the blockchain because you can follow every single transaction and you can follow the money. So I guess you have a higher chance to recover your funds, right, in case something happens. But second, and I mean, you mentioned Curve, very unfortunate what happened to them. And as you mentioned, it was because of the language. So obviously they only had one auditor that could, audit their code and their language. But in this case, I guess it's just having more than one auditor if it's possible, but also putting blockers where one wallet or one transaction cannot take out too much money at one time. And you kind of have barriers where, okay, well, if 1 million went out, then there are some checks to do before they can continue to take out more money. In this case, for example, when it comes down to Mimo and the Kuma protocol, we have multiple technical auditors. We also have financial auditors, and obviously we constantly check, to get more help and to get people to check the code. So, yeah.
And in terms of safety in DeFi, would you like to add anything?
Use trusted CFI to access DeFi, i.e. Coinbase.
Nice. Another thing that we kind of overlook, I think, a lot within the crypto industry about DeFi and use cases for crypto. We all see the potential. Currently, there aren't that many that are applying to the real world. You're obviously working on one of them at the moment. But can you give us some examples of the use cases that you foresee DeFi being used for? Where can it add to what we currently have? Anyone lead away?
Sure. So for me, I think the biggest use case would be automated market making for real world tokens. So I think right now, obviously, liquidity is a big issue for tokenized real world assets. And if you are able to automate market making for these types of tokens, you are essentially creating a completely new market. And you're opening up these tokenized assets for trading. We are opening up these tokenized assets for even more efficiency, which I mentioned earlier, i.e. By opening up these markets for 24/7, 365 live action, which would be extremely beneficial for tokenized real world assets. So for me, that's, I think, the biggest use case where I think there's massive applicability, relevance, and I do think eventually there will also be a lot of natural demand from traditional financial institutions.
Yeah, I definitely believe so. For the AMM itself, it's really important to stabilize the prices of the tokens so that it can be utilized, it can be used, merchants can use it for their daily lives. So it's really, really important for AMM to really the market makers to do their job. Yeah, so I think with that, eventually the utility tokens and for the decentralized money, the DeFi system itself, we are looking at it to be more stable, so that people can apply it. So actually, it's the same what I have mentioned earlier. It's we really need to see how how the tech giants use the UX UI for the adoption, and then that is where we can really allow the internet money to be fully utilized into the product and services. That's the natural way to go, and for the AMM to come in to really stabilize tokens in general.
Yeah, I would say just in general, more efficient, more liquid, and a lot more accessible. Now it doesn't mean that the users will actually, I mean, it's like when you're using, I don't know, Google or, or your emails. You don't have to understand how internet works for you to use those applications. And I guess when it comes down to blockchain and DeFi, it's going to be the same thing. It's just, allowing a whole new world for users and for people, but without having to understand that, one, how it works, but also that they're actually using DeFi or blockchain. You could be logging into your banking app, typically, and your savings account, has 8% yield, year on year, and that is actually backed by DeFi product. But you don't have to know it as a user to still benefit from it.
Yeah, and I think it's an exciting use case, like a potential use case, is the idea because everything's automated and there's no middlemen, you can create things like inflation-protected stablecoins which generate yield on the back end. There's no intermediaries, so there's a reduction in fees which can generate this income essentially. Yep. And there's so many unique use cases that when you would make it more efficient and remove middlemen, you can create so many ridiculous products and services.
Yeah, ridiculous, right? Just like sitting down, we'll make money. So that's the future.
And I think one very cool example we had was, for example, some apps in Latin America or different parts of the world, basically, where their local currency, suffers from inflation. So a lot of people were basically, essentially sending their money in pesos or other currencies into US dollar, on the app, or USDC in this case. And it was interesting for us to discuss with them because instead of having it, for example, in USDC and having zero yield, so yes, you're hedging the inflation of your local currency, but not of US dollar. When we tokenized, for example, US Treasury bills into a stablecoin that pays 5%, that was an even better product because now not only they can hedge inflation in their local currency, but also they can hedge inflation on the dollar.
And we touched on very briefly there what the potential future could be holding. I'm conscious that we're running out of time, and I think something that is very good to cover is kind of where we could be going with DeFi, what the next steps could be. Give me where we're going in the next 5 years and what the dream is, really. Feel free to lead away, anyone.
I mean, I would say hopefully, a lot more regulation, right, to allow a lot of traditional finance institutions to work with us, to work with DeFi players and work in DeFi, and hopefully make the whole financial market the whole financial system, again, a lot more accessible, efficient, and liquid for everyone.
I think probably DeFi will also play a major part in the decentralized autonomous organization in voting for AI. So whatever decisions AI makes and the balance and check will be there. So I think the integration, because the major disruption is not decentralized DeFi, it's just a natural way where it's going for decentralization without the middleman, where the middleman can find something else to do, like live their own lives. So, but AI is actually the true disruption of the financial industry or any kind of industry. So it needs to be regulated by the decentralized method. Yeah.
I haven't really seriously thought about this question, but if I were to think about it right now, I think my dream would be if we are able to abstract all the complexities of accessing DeFi today and make sure that any DeFi platform is readily available and readily easy to use, easy to understand, I think that would be my dream of DeFi. Right now, I think there are very few of us in this room and elsewhere who are able to use these DeFi platforms intelligently and without any prior crypto knowledge. I think most people who access DeFi are the ones who are already in the crypto ecosystem and have been in the crypto ecosystem for many years. But I think the dream is really, if you want to make DeFi more accessible, more inclusive, you need to have an ecosystem where the UI UX, the complexities of managing your passphrase or your private keys, sort of all those complexities are abstracted away, and you are essentially left with an app which is similar to using an Uber or a Grab, but still gives you access to all sorts of financial products. That's the dream.
And in terms specifically of tokenization, what do you think realistically we can tokenize? Where do you think tokenization is going? And do you think it will interact directly with DeFi and offer bigger yields through tokenization, or how is that relationship going to work?
Yeah, I think that will be the way to go to onboard the masses on blockchain and DeFi, by also having products that they are familiar with, but on chain. So we can bring them on chain. They know, I don't know, having like Tesla stocks, for example, you know, but on in DeFi, so that they can get accustomed to how things work, you know, like to using different apps. And then obviously they can go into more like crypto native financial assets, you know, more degen stuff as well.
Got it.
Yeah, absolutely. NFTs, like, non-fungible tokens, which
Are they still around?
Yeah.
of course is growing. Like Play Store, they are applying that, and it's going to be really exciting because that's where the true utility of the decentralized tokenization. Imagine you're having fun, you're making money, you are being able to play, it sounds like a pipe dream, like to be able to, convert whatever you're doing, the work in your gaming world into real world, to be able to eat your instant noodles, so it sounds like a pipe dream, but it's actually really, it's just a very natural way to go, because everything that we are doing is about gamification, so it can be applied anywhere. Like to incentivize people to give feedback, which in future I think the true currency is not going to be just like money, it's actually your reputation as a human being. So with that, the platform itself will regulate more about your reputation. So that I would think that all these platforms will change their tone. And actually, just to share an interesting story, that how I actually worked for the past 2 years. So I work with like 70 people in a project, and itself, the organization is really decentralized. So everybody come together when they have finish one of another project. So it just goes on. So nobody hogs any places. Whoever works on a project will have whatever passive income in future based on their stake that they have worked on it together. So they will not hog it. They won't become a middleman per se to have high costs to be generated to manage the organization. So it's truly I think efficient, yet it is what makes people go by, work by merit. I think it's a very interesting concept for decentralization, for work. You come together when it's necessary, you scatter when it's not necessary, and then you have a stake in it after the project is done, and you can go on to the next one. That's how you innovate things.
And we've run out of time there, but any closing remarks, anything that you guys want to say to finish off the panel? What an idea could be, where in the world do you think is going to turn into a DeFi hub going forwards really quickly?
Right now, I think I would bet on Dubai and Hong Kong.
I'd probably bet on Dubai.
I don't gamble, so. Serious. I think, thank you very much. I think I love the questions. By the way, the questions is really like impromptu. We are answering as he asked. So we're really truly having our true opinions here.
Awesome. Thanks everyone for coming. Thanks Sagar, thanks Amy, thanks RAFIK.
Thank you, Max.
Thanks.
All right.
Thanks everyone.